and welcome. You're watching Business Today TV. I'm Sakshi Patra and this is a special edition where we're going to be focusing on the mutual fund space and the disruption that is likely to take place with the coming of new entrants into the AMC industry. Remember, the $46 trillion mutual fund space is looking set to welcome new players, with the most recent one, Zerodha, now announcing the launch of its first two schemes from its mutual fund basket. So what does it really mean for the mutual fund industry as a whole? How should the mutual fund investors really look at this and the spate of new entrants? How will they differentiate between the traditional ones, and does it make any difference to you with your existing investments going in the mutual fund space or with the future investments planned for you? How should you be really approaching the entire mutual fund space right now? To help us with all of this and much more, joining in with me is a special guest. Mr. Rahul Bhutoria joins in. He's the director and founder of Wall Trust, which is a bespoke multi-family office. Welcome, sir, and thank you so much for taking the time out for this discussion. And just like how I was pointing out, a spate of new entrants and also the existing financial institutions are now getting ready to launch their own AMCs. If they had an AMC, new funds are being launched. So White Oak recently started an AMC. You had Bajaj Finserv also. Shriram was getting there, already there trying to revamp their business, scale it up seriously. Helios Capital and now Zerodha. Even Kenneth and Rade is now trying to launch his own mutual fund as well. So a lot of names flying around there. First up, to give a sense of to all our viewers, why are new players really wanting to enter the mutual fund space so suddenly?
Saki, thank you for having me on the show. Yes, we've seen a spate of new entrants coming into this industry. Some existing asset managers running either PMS, AIF, now coming to the mutual fund space. And I think one of the key reasons is that there's a significant move towards financialization of assets for the Indian consumer, right? So when we are talking to our clients, who traditionally held more FDs, real estate, gold, are now moving towards financial assets, right? And there's a great opportunity for the industry to grow, and it's a great opportunity for the consumers, because as the industry goes, there's going to be healthy competition, which is always good.
Okay. And, the most recent one, like I talked about, Zerodha. What does the entry of Zerodha in the mutual fund space really mean? Because we all know how Zerodha is known to bring in disruption. It did so in the brokerage space. And now, do you really expect the same kind of stuff happening in the mutual fund space as well with Zerodha entering?
So Zerodha, when it entered the brokerage space, that time was a time when the costs were very high. Typically, you called your broker and the broker would do your transaction. So when Zerodha entered the space, they disrupted the space by low cost and using more technology. Now, when we look at the mutual fund space is already evolving fairly well. The regulators are doing a good job at it. The industry is doing a good job at it, coming up with innovative products. Index funds are already there on the large cap. Almost 50% of the large cap flows are in the index space. So it's going to be interesting to see how Zerodha disrupts this space. But they're at a very different time in brokerage and a very different time in the industry. But again, there's a huge untapped potential in the industry. So it'd be very interesting to see how the consumers are going to benefit from the entry of Zerodha into this space.
Fair enough, but do you also foresee any trend with the entry of Zerodha right here? And also, will it be really challenging for the existing players to continue to hold their ground with such disruptive players entering now?
It would be, right, because with new entrants coming in, with new ideas coming in, they are more technologically enabled. However, having said that, let's just see where the mutual fund industry is as of now, right? This industry was roughly about 25 lakh crores in 2019, and I think April this year figure was roughly about 41 lakh crores. There's been a significant growth in the mutual fund industry. The players have been able to get this growth by launch of various new innovative products. So while, yes, anytime a new entrant comes, they try to take away the market share. But remember, this is already a fast-growing industry, and the existing players are themselves innovating new products.
Absolutely. Again, the big question comes in. It's going to be very difficult for the investors to really look at this space. Of course, the new millennials, Gen Z, would entered the mutual fund space in the last 2 or 3 odd years. They got more comfortable with the new entrants like Zerodha. Perhaps for them to extend their branch out and look at mutual funds, it will be easier for them to have Zerodha only offer to them the mutual fund space. But those traditional investors who've been already in their 30s, 40s, 50s, and who had been investing for some bit of time from with the traditional investors, with the companies that have history attached to them, the track record, the fund management team that they boast of, how does one really decide as to which one is going to be good for them?
So I think first of all, as anyone would say, it's first of all asset allocation, right? And then you have to see which under that particular segment, say a large cap or a small cap or a multi cap, or even a multi asset, which scheme is performing the best, right? Now, for investors, when new entrants come in, there's two way to analyze them, right? As you said rightly, for a traditional mutual fund AMC house, they have the data, they have the background, they have the history, so it's easier for them to analyze it. But for the newer players, there are two ways to do it. If the entrant has run some kind of asset management in the past, either in the form of a PMS or an AIF, then that's something that someone can analyze and get an idea of how the asset manager performed during various cycles in the market. Or the other way is what some of the new entrants are doing. They are coming up with a passive investment, right? The reason they're coming up with a passive investment is because that data is already available to the investor. There, the disruption is going to be either reducing the tracking error, which is how well the passive fund does vis-a-vis the index that's tracking, or you try to reduce the cost, right? So these would be the different ways the investor can try to analyze and understand the new entrants and the offerings they are giving in the market.
Correct. Also it will be important for all our viewers to really understand what kind of funds are these new AMCs really launching. Now what I see is a lot of interest tilting towards the passive funds or the passive category, and they're not into all kinds of schemes, but largely the schemes that are being launched are into the mostly into the passive category. So why are they really choosing to go with the passive offerings rather than active offerings right now?
So let's look at some data, right? Year on year. If we look since 2019 till April this year, index funds have grown 1.5 times, right? The mutual fund industry has grown roughly about 60 to 70% during that period. So clearly there's a strong preference from the investor towards a passive fund. Now, what's the reason that the investor is interested? One, because these are low cost funds. Second, it's easy for the investor to understand it, right? So now, when you are a new entrant, you have two ways, as I said before. One is that you have done asset management in the past, and you are able to tell the investor, I'm going to do a good job at asset management going forward with your funds. Or you tell the investor, I'm not launching a passive strategy. By the way, it's low cost, and the data of the strategy is available for you from either the website of NSE or BSE and various other indices, right? It's a much better way for investors to understand the data and understand the risks involved and take a call on the new AMC entrant. This could be one of the reasons why passive investments are being launched by new AMCs.
Correct. So just to benefit all our viewers, Zerodha has already filed the draft offer documents with the market regulator SEBI to launch two schemes, that's Zerodha Tax Saver, the ELSS Nifty Large Mid Cap 250 Index Fund, and Zerodha Nifty Large Mid Cap 250 Index Fund, that is ZN 250 as well. And both these schemes would be benchmarked against Nifty Large Mid Cap 250 Index Fund, while one is a normal diversified equity fund. The ELSS scheme will be the tax saver scheme that will give section 80C benefits to all our viewers who may be wanting to save some tax by investing 1.5 lakh rupees under section 80C via a mutual fund. So this could be an option for you right there. So these are the two funds that Zerodha is launching. Also wanted to understand from you, how will Zerodha really look to save costs with just launching the passive funds? Do you expect it to further diversify into active going forward as well? And then how will its business model really work there?
So it's very interesting to see how the passive funds are being priced right now, right? When I was doing some research around it, I just saw one other fund who is tracking a similar index, and I think their TER ratio on the direct plan is about 15 bps, right? So it'll be interesting to see how Zerodha prices it. Also, remember, Zerodha is only looking at a direct model. They are not looking at distributors. Will not have a regular distribution. They not have a regular plan. They will only have a direct plan. So from that perspective, the costs become low only if you have only a direct plan. Also, just from a background, Zerodha is a it's fairly high on technology. So it'll be interesting to see how the technology is being used to reduce the cost in the passive side, because on the passive side, scale is more important, which they can do through technology, right? So let's see if they go to active or not. I don't have the answer to that, but I'm sure that whatever they do, they will bring more healthy competition to the industry where the consumers will benefit more.
Absolutely, the consumers will benefit more. On that, the last question comes up is, do you really believe, we've also seen some shift happening from the traditional broking houses to Zerodha, like zero broking houses, for a lot of investors who'd been investing and paying a lot of brokerage as well. Do you see that happening in the mutual fund space too, people shifting out of their own AMCs to these new AMCs where the costs would be fairly lower?
So, so I would like to put it not from an AMC, but from an investment strategy perspective. And yes, that is happening. More and more people are shifting towards passive ETFs and index, because the cost is low. It's easy for them to understand. Also, just as I said before, India is going through higher financialization of assets, right? So when you start to do something new, it's much more easy for them to get their feet wet and understand by entering into an ETF or an index strategy, which is low cost. And from there on, as they kind of understand it, they can go into the active market. Also, while the new AMCs may be launching not maybe, are launching the passive and index and ETF, there's existing players themselves are doing a fair bit of innovation and have launched a lot of ETFs and index funds.
Right, absolutely. Well, thanks a lot, Mr. Bhutoria, for being with us and discussing all of these insights about as to how to understand more players entering the mutual fund space, what does it really mean for the average investor, and how should one differentiate between the new entrants and the old ones, and then take a pick as to where does it make more sense to continue their investments into the mutual fund space as well. Glad to have you with us on Business Today TV, and hope you have a great day going forward. All right, and with that, we'll wrap up this special edition. Zerodha entering the mutual fund space. Two schemes is what it is launching. With the passive funds, it is making an entry into the mutual fund basket. What remains to be seen is how does it really benefit Zerodha as a business, and also how does it really manage to disrupt the mutual fund industry, just like how it managed to do with the brokerage space as well, and will people be more interested to shift out of the traditional basket to players like Zerodha in the mutual fund space as well? All of this remains to be seen going forward from here.
Thank you. I can log off? Thanks. I can log off, right? Okay, thanks. Bye.